Hello, dear students. First of all, wish you all a very happy and prosperous new year. I wish that 2026 helps you in every respect, brings you peace, prosperity, and more skills. As all of you are aware that the first level of Franklin Templeton Mutual Fund Olympiad is happening on 3rd of January. We just thought it will be worthwhile that we give you few tips to prepare for this exam. So I'm sharing a small presentation with you, which will not only recap the key terms and conditions here, but will also give you quick guidance towards appearing for this test. So as you know that the level 1 is happening on 3rd of January, which is Saturday. This exam will be conducted online and the exam will be proctored by AI. This exam, this level will have about 60 multiple choice questions and the duration is 60 minutes, which means you will get 1 minute per question. And we will advise that wherever you're taking this exam from, you should have a very stable network connection. And there's a small compatibility test also that you need to do. I'm sure you have received an email regarding the same. Most important is that all the proctoring guidelines have to be adhered with and followed very rigorously, I would say. So for level 1, as you know, there are three parts. First is the concept based questions. These are going to be about 65% of the weightage. The weightage for conceptual questions is about 65%. There are application based questions which are 25%, and then there are analytical questions which are close to 10% of the weightage. So if it's, let's say, 100-mark paper, you'll have 65 marks for concepts, 25% for application, which is 25 marks, and 10% for analytical questions. So in financial concepts, you will be tested on time value of money. What is time value of money? Let's say if I give you 100 rupee today, vis-a-vis if I give you 100 rupee next year, which is more valuable? If I compound 100 rupees by, let's say, 10% over next 15 years, what will be its future value? So most of these will be tested. Simple interest, compound interest, present value, future value, these will be tested. Then there is risk and return. What is risk return trade-off? Why should we diversify our investments? Why mutual funds are putting their money into different shares? How diversification actually helps an investor? The third part of this topic is asset allocation. Very, very important. Asset allocation is not a random activity, but it's a process oriented uh, action plan which an investor needs to take in order to diversify his assets. When you diversify your assets, the portfolio risk will come down. And within asset allocation, there's a very important concept of correlation, how different asset classes are correlated with each other. Now, for example, if I were to tell you uh, that if you're holding an equity fund, how you should diversify. So somebody may tell me that if it's a large cap fund, I can buy a small cap fund also. So I'll be diversifying within equity. But then it may not be the real diversification. Somebody may say, I have an equity fund to the tune of, let's say, 80% of my portfolio. Now, remaining 20% I'll keep in cash, or remaining 20% I can keep in gold. Now, the correlation of cash and gold will determine what is the risk of your portfolio. Then we will also study the measures of risk, which could be standard deviation, beta, correlation. There could be measures of risk adjusted returns. Within equity market, you'll be tested on equity market structure. How does the stock exchange function? What are the structures? What is primary market? What is secondary market? Then how do you trade? What are the different trading mechanism? What is a stop loss order? What is a market order or a limit order? Then the types of the market, the primary as well as the secondary market. Who are the key constituents of these market? Who are the key participants in these market? What are the different instruments which are present in these markets? For example, in primary market, you'll have IPOs, you'll have right issues, you'll have follow-on public offers. Then you'll also be asked about corporate action, bonus issues, dividends, stock split, how they impact a stock price. And then, very important, will be a session on financial ratios, price to earning ratio, price to book, dividend yield, earning per share, interpretation of ratios, price earning to growth ratio. There could be questions on EV to EBITDA. So read the ratios very carefully because these ratios need to be interpreted by every investor and every advisor. Similarly, after equity markets, you'll have a session on debt markets, which will start with what are the different type of debt instruments, both in capital markets as well as primary markets, money markets, who regulates these markets. And then there are certain terms in fixed income. What is my coupon? What is the duration? What is bond yield, yield to maturity, duration? These terms are very intricate. You need to be very carefully learning with them. For example, coupon rate is the interest that I am paid on the face value, not on the market value. It's on the face value. Then there is bond yield, the amount of money you will make in a bond by investing in it. Or there could be, let's say, yield to maturity. If a 5-year bond is maturing in now 3 years, the yield to maturity could be the return, if I hold it till those 3 years. And then, of course, you'll be asked about duration, modified duration, convexity. Few questions can be there. Similarly, the bond pricing uh, concepts will be tested. What is the relationship between bond prices and the interest rates? Because it's a AI proctored exam and most of it is online, you may think that you will not get very complicated calculations. So the calculations are not going to be very long. I'm suggesting this from my personal experience. Then within that, you will also be tested on various macroeconomic principles, understanding of inflation, what is monetary policy, what is fiscal policy, yield curve, the different shapes of the yield curve, what do they mean, and impact on interest rates and debt markets. How macroeconomic factors affect my economy. Then you have equity, debt, and hybrid mutual funds overview. Equity funds predominantly invest into equity. Debt funds are investing predominantly in debt, and hybrid funds combine they invest into debt and equity, a mix of debt and equity. Depending on the mix, the fund will be rated at either hybrid fund or equity fund or debt fund. So equity mutual funds have a weightage of 7%. Within this, you will be tested on small cap funds, mid cap funds, large cap funds, dynamic funds, which funds have what kind of risk, which kind of investors need these product. Similarly, in debt fund, the type of debt funds, the key risks involved in debt fund. Similarly, you will be tested on hybrid mutual funds. Uh, Within hybrid, now we have a lot of schemes. Some can be very conservative and some can be very aggressive also. And the concept of rebalancing will also be tested here. In the mutual fund processes and operations, basically what you will be tested on is various regulations, various ways to invest in mutual fund. For example, in mode of investing. I can invest my money lump sum. I can also invest through SIP. I can also invest through SWP, systematic withdrawal plan. And while withdrawing also, I may have multiple options. So clear understanding of how an SIP works, what is an STP, when the money should be given, what is the NAV applicability, everything will be discussed in this session. And of course, it will also test you on the costs and the charges. They may say that, XYZ fund is managing this much crore. You please tell us what will be its weighted average or cumulative expense ratio. And then there'll be a section on mutual fund structures and regulation. What is the role of SEBI? What's the role of AMFI? What do the trustees do? And what do custodians do? Wealth creation with mutual funds has a weightage of about 18%. Here, you'll be tested on power of compounding, goal-based investing, how do passive funds help us, what is the difference between active and passive, and the concepts of financial planning will be introduced here. There is a new category which is being introduced in Indian mutual fund industry, which is SIF, Specialized Investment Funds. Now, these funds are similar to AIFs, Alternate Investment Funds, where these funds can also do leveraged trades. To invest in a SIF, you need minimum 10 lakh rupees of investing. So what is the concept of these funds? What are their purpose? AIF, within AIF, how many categories are there? Which category can do what? Which category cannot do certain actions? So certain activities they cannot do. So everything will be covered here. The risk return characteristics of a SIF fund vis-a-vis a mutual fund vis-a-vis PMS shall also be tested. And very important is the types of PMS services: discretionary, non-discretionary, and advisory services. And then a comparison of these funds will be done with mutual funds, so that you understand very clearly the activities or the arena with which mutual funds can play and the arena in which PMS and SIF operate. You'll also be tested on some SEBI regulation. So let's take this Q&A. For example, if I were to, yeah, let's say in general, mid-cap stocks as compared to large cap stocks tend to feature lower volatility, lower liquidity, and higher liquidity, higher growth. So mid-cap stocks will have higher growth, but their liquidity is going to be lower. Why the first one is incorrect? Because it is saying lower volatility. Mid-caps are, so question number 2 is the right answer. This is highlighted in green. Which of the following is commonly used payment option for SIP investments? Electronic clearing services, real-time gross settlement, or electronic fund transfer. Now, typically BNC will be the one-time fund investments. So if I were to move ahead, you will see that ECS. So every investor has to sign a ECS mandate, which is electronic clearing services, and after that, your investments will go automatically. A liquid fund redemption is received at 3:25 p.m. on January 8th. The applicable NAV is as on. So I have sent my redemption after 3 o'clock. So my NAV will be applicable on Monday, January 11th, because Friday is 8th and 9th and 10th will be Saturday and Sunday. They will be non-working day. ETFs are said to be more liquid than index funds because they are traded on the stock exchanges throughout the day. They are open-ended mutual funds with no trading restrictions. No, this seems to be incorrect. And they offer guaranteed buyback by AMC. This also seems to be incorrect. So the first question is why they are more liquid? Because throughout the day you are trading in them. You can sell them at any point of time. So this is all from my side. I just wanted to give you a brief overview of what you can expect in this exam, and where you can prepare from. We have already shared few resources with you on the email, but my sense is this stuff is available, widely available on YouTube. It is there on the Zero the Varsity. You can go to any mutual fund or insurance company's website. There also basic and concepts would be mentioned there. You could also look at some of the advanced learning materials on Google. There are NISM certifications around these subjects. So you could also, for example, NISM mutual fund book, which is NISM 5A. If you go to Google and download a free PDF, there is a good possibility that you may get that book free of cost also. You may study them. So, wish you all the very best. Once again, wish you a happy and prosperous new year. We look forward to welcoming you to National Mutual Fund Olympiad, which is sponsored by Franklin Templeton. Franklin Templeton is one of our most trusted partners, as well as one of the oldest mutual funds in India. So, thank you very much. I look forward to seeing you all. Thank you.